Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the CBOE. Time now for our Cash Tag segment. Taking a look at Netflix. For that, we want to bring in our next guest. That is Landon Swan, co-founder of Likefolio. All right, Landon, we've got earnings from Netflix due later today. Estimates are that revenue will top $11.5 billion. EPS expected to come in at $6.89 on an adjusted basis. So that's the backdrop. I looked at your charts, and in one of your charts, I was surprised by the direction, I guess, of what web visits look like. So take us through some of your latest, what you've noticed about trends as it relates to Netflix.
Yeah, absolutely. So obviously, web visits is very big for Netflix. More people go to the site, the more people are watching, signing up, watching ads, etc. We've actually seen a fairly negative move on Netflix. And I think that's because they were so high a year ago. So when you look at this, it's on a year-over-year basis. They are obviously the king of streaming. They dominate this sector. But when we look at them versus their competitors, it always kind of used to be, and this was the sentiment that we would see online, is you have Netflix as your core subscription, and then maybe you have a few others. And now there's so much competition that we're seeing that Netflix is one of the ones you might have instead of it being the core one. They're losing digital mind share, if you will, to a lot of the competition. So we've actually got them at a negative 15% year-over-year basis on web visits, where other competitors like Roku and Disney are positive. So we do think that they're losing some of that mind share. And really, I think probably the most important thing to think about when it comes to Netflix and their earnings, let me walk you through their last report. I mean, their revenue was plus 16% year over year. Their income was plus 46% year over year. They beat on earnings. Their margin went up 7 points to 34%. They have $2.27 billion in free cash flow, and they raised guidance. And all of that resulted in the stock selling off. And so what I'm talking about here is really, really high expectations. If you go back a year ago, compared to now, the stock is up about 65%. And the forward PE is, I think, 52 or 53. And that's, I think that's 2x the average of streamers, and about 76% more than the 5-year average of Netflix forward PE ratio. So they are pretty much priced to perfection. And again, if you had to pick a streamer to win, it would be Netflix. They're the king. They're fantastic, but they're definitely losing a little bit when it comes to competition. I think the competition's starting to creep in. And then also, I think investors are probably not worried, but I would be irked as an investor that they stopped reporting subscriber numbers. That move away from transparencies is never good. You don't think that they're hiding something, but they're choosing not to report something that they used to report. Now they're reporting revenue, engagement, ad performance, which are very important metrics, of course. But I would like to know subscriber count as well. And the fact that they're not just, rubs me the wrong way a little bit. But overall, great company. We think they're doing very well, but losing a little bit of mind share. And the problem is that they're just priced to perfection. So any kind of miss is going to hit the downside far harder than I think any kind of beat would.
Landon, let's start this conversation with the fact that Netflix is the clear leader in streaming and an incredibly well-run company. Now, let's get to the fact that doesn't always mean the stock's going up when earnings come out, like you mentioned from last quarter, right? I think the ad-supported tier is very important. You want to see acceleration in that, not any form of deceleration in any of the metrics, frankly. And now my question is, when are sports coming, right? That's the next frontier for Netflix. They've already dipped their toe in, but you got to think that's on the horizon. And then finally, Landon, address the cancel Netflix. Did it make any difference? Did it make a dent in any type of Netflix momentum, or is it something we should be just ignore completely?
Yeah, good question. So that was a pretty big move that we saw. I like to compare it to the two other biggest negative sentiment moves that we've ever seen were a Snapchat rollout and the Bud Light marketing campaign. And the Bud Light was the worst that we've ever seen. The cancel Netflix, which was children's shows upsetting conservatives, basically. That was a very large spike. Elon Musk led that campaign, I guess, and it lasted maybe 2 to 3 weeks. And so it did not have the staying power that the Bud Light marketing problem had. And so I think that it probably had a minor effect, but I don't think that they're going to come out today and, well, they're definitely not going to say we lost a lot of subscribers because they don't report those numbers. But I don't think that it had a huge impact. And as long as it kind of stays in the rearview mirror, I think that investors can put it behind them. For a while there, the data at Likefolio was concerning, but it spiked, it ran up really quickly, and then it pulled back just as quickly after about 2 weeks.
Landon, let me ask you this. You said that Netflix is losing digital mind share. I'm curious to know who, I know your charts show that there is, it seems to be greater attention or web visits to Disney. But even when we look at the share performance, Disney's barely got its head above water year to date. Netflix has been a big outperformer compared to the S&P 500. And then what I hear about, for people who do celebrate Halloween, the costume is all about this K-pop Demon Hunters, which is a popular show on Netflix, or a movie on Netflix. And yeah, I mean, this is probably out of our lane in terms of the actual content, but I know it's out there in the ecosystem. The kids are watching this stuff. So I'm just curious to know, who are they actually losing market share to?
Yeah, I'd say Disney is the one as far as our data concerned. Now, again, this is year over year data. So Disney was lower a year ago, Netflix was higher. So it's all about that comparison. So we're not saying that Disney's getting more viewers than Netflix. We're just saying that the change on the year over year basis is better. Roku as well, Hulu not doing as well. But you can see here where the digital mind share, if you will, is moving. And again, Netflix had such a high bar. It's going to be tough for them to maintain that. But I think investors want that. They want to see a very high level. They want to see positive, obviously. They don't want to see anything negative. And it's, I think this is just a bit of a warning sign, a yellow flag that, hey, this report may not satisfy these extremely lofty expectations. We think Netflix is priced to perfection with that forward PE ratio of 52. It's extremely high, 53. And anything negative at all is probably going to be very poorly received and could, with multiples, it goes both ways. It could really impact the stock negatively. Whereas, as we saw last quarter, like I said, they beat on everything and then they sold off 5% the next day. So if I'm trading this, I'm definitely leaning to the downside, risk defined, of course, but I don't want a lot of exposure I don't want to have a lot of risk where if it goes down, I lose money, because I think that's the more likely outcome for Netflix. But again, they're the best, no doubt about it. They're just priced too high, I think.
Okay, that's a good point. All right, well, like that video that we just saw, we got to get our popcorn ready for the results after the bell today. Thank you, Landon. That is Landon Swan, co-founder of Likefolio.